Hey guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be talking about the easiest way to grow a small account, whether you're swing trading with $100, $500, or maybe a small account for you is $10,000 or $20,000. We're going to be talking about the easiest swing trading strategy to consistently grow your account. That is the key word, consistently. A lot of people can buy a random stock and have it go up, but in order to be a successful trader, you have to be consistent, and that's what we're going to be talking about today. So I hope you guys all enjoy it. And if you guys are like, who is this random guy on YouTube? My name is Carter. I'm a full-time swing trader in the stock market. And with that being said, we do have an amazing school where I teach people my strategies, how I find stocks, my approach, everything. If you want to take swing trading to the next level, guys, check out our school. And we have a back to school day sale for 50% off. You guys can use code SCHOOL for 50% off. So check it out down below. It's awesome. We got a private live streams. We got quizzes, a group chat, lectures, everything. So check it out. Don't forget code SCHOOL for 50% off. And guys, let's jump into the best strategy to grow your account consistently. So for me, the broker I'm using for this is going to be Moomoo. They're absolutely fantastic. For those of you that follow the channel, you guys know I am a Moomoo guy. I love them. And I'll put a link to them down below where you guys can sign up and get up to 20 free stock. But the biggest thing here, why I like them, is they offer good scanning. And this is where we actually found this stock, is using Moomoo scanner here. Now, for me and my approach here, I love a checklist. I love keeping everything easy. I love the expression MISS, M-I-S-S, make it simple, stupid. Don't overcomplicate your trades, right? For me, I find it when I have 30 monitors, when I have different charts, indicators, and, you know, it gets overwhelming, it gets daunting. And for me, I lose money in those situations. So I love just having one stock up, and that's what we're going to be talking about. And I love having a checklist to make sure I am choosing quality over quantity. So let's get our trading journal out. A trading journal is probably one of the most important things any trader needs. And the reason why is because you document everything. You document what goes right, what goes wrong, and more importantly, how you can have those mistakes and have them not happen again. So guys, get a trading journal. I'll put mine down below as well. But all right, let's jump into this checklist here and pretty much the strategy. So with this stock here, this was a stock that we recently called out. It's ticker symbol BJ. This is a stock here that has a nice upward trend, has gone from lows at $60 all the way up to $92 in about a year span. So we have that good momentum, good buying pressure. Now, as you look at the stock here, what do you guys notice? Well, each and every time it hits these moving average lines, because that's what these lines are, we have the blue and the red, each and every time it hits them, it gets good buying pressure there, right? So now, looking at this, where would you want to buy this stock? Well, you'd want to buy it on or as close to this moving average line as you can. So you guys can see it recently sold off here. So following our checklist, the first thing is an upward trend. The second thing is the stock on a support line. So you guys can see it was actually trading at the 90-day moving average line. The next thing is using an indicator called the RSI. The RSI stands for the Relative Strength Index. This pretty much tracks momentum, and looking at this, it was trading for a 29. The last time it was trading for a 29 was back in here where we had this good move going forward. So now looking at it, okay, it's undervalued on the RSI. We have an upward trend. It's on a support line. The next thing you want to do is never hold during some sort of earnings. So the earnings for this stock is actually going to be in a couple of days, 8/22/24. So right now it's 8/19/24. So we do have a couple of days, which is good. The next thing, and the reason I never hold during an earnings is because it's a 50-50 chance of making money, right? You guys can see they announced an earnings here, the stock sold off. They announced an earnings here, and the stock popped up. So it's a 50-50 chance of making money. We want those odds a little better. So how do you enter the position? So what we do is we go to the lower time frame, and what we want to look for is finding some sort of support or some sort of breakout. So you guys can see it formed this general downward trend, and entering on the breakout of the red line, which is that 200-day moving average line, is the best. It gives a great risk and reward of about 4 to 1. So you enter here, you keep your stop loss just below the blue line, which is the 90-day moving average line. You keep it just below it and you let this thing ride. On top of that, it does look like right now, right in here, it's about to do something called a golden cross. A golden cross is where we have a lower candle or a lower moving average line break up through a higher moving average line. Very similar what happened right in here, where we had this good move right there. And if you would have entered on the breakout of the 200-day moving average line, you would have made some great profits as well. So entering here, letting the stock ride up, keeping your stop below the moving average lines. Very simple entry, very simple way to find opportunity. And guys, very simple strategy. So I hope you guys all enjoyed this. If you guys have any questions, feel free to ask it down below. And like always, hit that like button, subscribe, and don't forget, code SCHOOL for 50% off. And we'll teach you guys how to find these stocks, my approach, and everything. So guys, hope you guys enjoyed it. Like, subscribe, and we'll see you guys in the next one. Take care.